had been First State, Hamilton State, and then Ameris. And so in that time, I had different functions during that 14-year period. But one thing that I had worked in was with mortgage lending, personal loans, consumer loans, and then, of course, some business loans in that aspect as well. Now, with Heritage Bank, as I transitioned over, I'm no longer managing a branch. I don't have my hands in all that loan piece just because I stay on the road visiting our business clients day in and day out. So this whole stay-at-home thing has really gotten to me. I don't do good by myself. And so I'm thinking I'm going to need to get a hamster or a dog or something to be at home with me if this goes on too long. But with that being said, I'm dealing one-on-one with our business clients. So when they need to open up a new account, if they have a scanner, maybe they have remote capabilities to scan deposits in their office and a scanner goes down, then I'm going out and I'm fixing those things. So I don't have too much hands-on with lending now, but I can most certainly answer a good many of the questions and give you a high-level overview of kind of how the deposit side of the world works and the loan side of the world works. And then if there's questions that I can't answer, then I can give you my email. Y'all can send those to me, and I'll most definitely try to get answers back to you on those questions. So,
Awesome.
With that being said, I think just over the 15 years or so that I've been in banking, when you have business owners, small business owner, large business owners, a lot of them I find don't understand how the loan process works. On TV, on the internet. In fact, I went on SBA's website yesterday just to kind of see what they're saying about SBA lending. And everybody makes it sound so simple. Oh, you're a business owner, somebody's just going to throw money at you. There's tons of money out there. But it, in reality, is not that easy, especially if you're a brand new startup business and someone wants to get something going. Unfortunately, oftentimes you've got to fund that yourself. And if you don't have a pocket full of money over here, then a lot of times you're having to put things in your own personal credit to get that business going and to secure money for your business. And so that's what we often see. And so over the years, it for me has been frustrating as a banker, as a lender, because I'll see people coming in and they need funds and they're saying, well, how do I get money? And there are things out there that help new business owners and small business owners, and there's just not a vessel out there in the loan world really that does that. So typically, if you're a business owner and you're looking for a loan, most all banks out there are going to look for 2 years, oftentimes 3 years worth of tax returns and financials on your business. They're wanting, of course, tax returns that's going to show what type of income's coming in for your business, but they're also wanting a personal financial statement to see what type of assets do you have, what kind of debt do you have. So on a personal financial statement, you're listing out, do you own a home? Do you own a vehicle? What are the different things that you have for your business? Do you own equipment, and what type of equipment do you own? Is there a value to that? So those are the things that we're looking at paperwork wise. So you can see when you're looking for 2 years, possibly 3 years worth of financials, then when you're a brand new business owner, that makes it really hard, even just in qualifying for a credit card oftentimes. And people will use a credit card for their business often as like a line of credit. Think of, I've got one client that is a t-shirt printing company or swag for businesses. And so, of course, they have to purchase the swag that someone is wanting to buy and have printed with their logo. So they need some type of line of credit to purchase that merchandise, print on that merchandise, and then once they sell it, they can turn around and pay that debt back and then keep their profit. And so oftentimes a credit card works well for that, but many times when you're brand new, you don't qualify for that credit card. So you have to do it in your personal name. So that makes it really hard. I've often over the years seen individuals that, when they come in and they're a new business owner and they're saying, well, what can I do for a line of credit? They'll go in the direction of a home equity line of credit. Well, I own my home, because that's going to be the first question. Well, what type of assets do you have? Well, since I own my home, I can use the equity in my home and borrow against it for that line of credit. So that's kind of what that piece looks like for a new business owner. on there. Now, one thing, Ariel, you had asked me about was SBA, Small Business Loan, Small Business Association, and they have programs for business owners. And when you look on the SBA website, it says they have loans starting at $500 up to, you know, $1 million or so dollars.
Right.
And those loans get really complicated. And so there's so many little loopholes in there that people have to qualify, because they look at, give you an example, working with an organization that had recently had some land donated to them. So on an SBA loan, you can use any, they'll qualify the money that you put into the business. So they're going to say, well, for you to qualify this loan, you've got to put 10, possibly 15% down. That you've got to have out of your money, out of your pocket. Well, they may say, well, you've already invested this much into equipment, and they'll consider that into the down payment. But what this one client that I have, well, they had somebody donate land to them to build a building on. Well, because that property was a donation, they can't consider it. So there's a lot of different little loopholes in there where some things will qualify, some things won't. So on that aspect, what I recommend to someone is sitting down with a lender when you're getting ready to start your business. Just sit down and have a business plan, or talk through that, just to say, well, what is this going to take, so that you can build out a business plan and know what to expect and prepare for. And then once you get in your business and you see your business growing and you know you need to advance to that next step, maybe expanding your business, then at that time sitting down with a lender and saying, well, what are my options? Is this SBA, which is a government-backed loan, so that you're not as high risk for a bank, actual banking financial institution? Do I want to go in this direction with a government-backed loan, or does the bank have a product that's actually going to be better for me? And kind of planning all of that out instead of just assuming, because I think a lot of people just assume that there's going to be something out there. They're going to walk into the bank, they're going to qualify, and it's going to be hunky-dory, and then they find out that it's not.
Hold
Does
on.
that make sense?
It does. Dodie, I need to ask everyone, can you please tell me if you can hear Dodie? I'm getting a message saying they can't hear, but they can see. I just want to make sure everyone can hear Dodie. Yes. Okay. Okay. Alrighty. Awesome. So I'm not sure, Andrea, if there's something on your end, as to why you cannot hear her. I know you are responding to me privately. So maybe there's something you need to turn off or on. Okay. All right. Sorry. Go ahead, Dodie.
Okay. So that's kind of a high-level overview as far as the loan side of things go, as far as what you would need when you're applying. Product-wise out there, when you talk about just a bank loan, you know, you want to purchase a building for your business. There are products within the banking world, instead of having to go through that SBA that's a government-backed loan. Those are oftentimes when you're looking at like a really large purchase, and they forecast and they base those loans based off of what do you predict your profits to be, as opposed to what are your actual profits. So there's a little more leeway in things like that. But a lot of times the banks will have a product that you can go into when you're looking at purchasing those. Especially, I would have said, you know, a week ago, before this whole coronavirus took into play, there's been so much competition in the banking world, financial wise, just because the economy has been so good. That we've seen products roll out in the banking world, where in the past, if you say you went out and you purchased a building, let's say you're a church and you want to buy your own your church worship center. And so with that, what would typically happen is every 3 years or 5 years, there would be a renewal period that comes up on that loan. So every 3 years, the bank goes in and reevaluates, or every 5 years reevaluates. What's the property value? Has it declined? Have we had any major economic shakeups that have depreciated the value of that building? Has something happened and the economy grown and the value grown on the building? It's looking at those types of things, and then we're reevaluating and saying, well, this is where your interest rate was. Do we need to make an adjustment on that? Or have you not been a good loan? And it may be that in that 3-year period or that 5-year period that we say, you know what, we no longer want to bank you, and so you need to go elsewhere and find funding for this loan, because we're going to expect you to pay up. because we don't want you anymore as a client. And so that oftentimes it makes clients uneasy. And then what they'll do is they'll amortize it. So they'll extend that payment period out oftentimes for 15 years or 20 years. So you're making the payment just like a mortgage payment on your home, as if it's over a 20-year period. But that 3-year, that 5-year, depending on what direction your bank goes in, is going to determine, do we keep it after that time frame? And if you think about back in like 2006, 2008, when the economy really flopped, there were a lot of loans that were coming up and renewing that where the client maybe had been slow paying their payment, they had some past dues, that the bank said, no, we don't want you anymore. You've got to find funding elsewhere. And it really put some clients in a pickle to try to go out and try to find out, well, who can I pick up this loan, or how can I pay this loan off? And that's where we saw so many foreclosures and all in the economy around Henry County. Because of that. So nowadays, because the economy's been so good, we've seen products come out to where instead of having that 3- and 5-year renewal period, if you've got a strong credit history, then you may be able to be put into a loan for a 15-year period or a 20-year period and not have to have that renewal time, just depending on your credit strength. So that kind of gives you an idea of products out there. Line of credit, oftentimes I hear people say, well, I need a business line of credit. And so with that, we think, of course, you think credit cards, because that works as a line of credit in a sense, charge it up, pay it down, charge it up, pay it down. But oftentimes people just want a line of credit through the bank. Some banks out there will offer a line of credit that's not attached to any type of collateral. But for those clients that are going to qualify for no type of collateral attached to it, they're high producing, they're high profit companies. I mean, probably the ones that don't necessarily need a line of credit.
What's a number for high profit? Because you're basically saying unsecured debt. Or unsecured.
For unsecured debt, I'm talking about people who are making, $1 million plus a year just in profit.
Okay.
So, when you're pumping out those numbers, to me, I'm thinking, well, gosh, if I'm making over $1 million a year, I don't necessarily need a line of credit. Because I'm high producing, but I've got to have that type of numbers backing that type of profit to qualify without any type of collateral. And so what I find talking to business owners, oftentimes an insurance agency, that t-shirt shop, that dry cleaners, to where, they may have the expense up front. So I need to still continue to pay my payroll, but my money's not coming in until later in the month, until those invoices are paid. That's where I need to close that gap. And so oftentimes, that's not one that's producing $1 million. So they need some type of collateral. And so oftentimes we can look at, well, what type of equipment do you have in your business? Let's just say I need a $25,000 line of credit. Well, what do I have that I can attach to it? Do I have company vehicles that are paid for in full? If I'm a dry cleaners, do I have the dry cleaning equipment that can be attached to that? And so some businesses, they run into it to where, well, if I'm just leasing my building, let's take an insurance company, I lease my spot, I've got my computers that we operate on, but other than that, I really don't have any assets. For something like that, a company-wide, it makes it hard to get a line of credit just because there's no collateral there to attach it to.
Okay.
So, does anybody have questions? Does that kind of make sense to everybody?
Does anyone have any questions for Dodie? So while they're determining if they have some questions, and they have an opportunity to put it in the chat. So basically with this COVID-19, and I know they're pushing a whole lot of things out, what does that mean for businesses who are in the 1 year, 2 year, 3 year? Just from what you know so far. I know a lot of the language has been where they want SBA to do a lot of the direct lending, but then it came back that SBA just doesn't have the infrastructure to do direct lending. And if they do somehow, I guess that would take the banks out of the way, from what I understand. I mean, what is it that you understand?
Yeah, and I don't know. I went back yesterday and tried to research some information on this bill that's getting ready to pass, and I really couldn't decipher the information just because they haven't, I guess, agreed upon everything on it yet and came out with a lot of rulings. On Friday, well, I think Thursday or Friday of this week, and we'll have to keep a watch for it. The chamber, Melissa Malcolm, she's an attorney.
Okay.
um, she was actually going to speak at the Small Business Booster Luncheon tomorrow, and of course we had to cancel that through the chamber. But she's going to do a webinar video. It's either Thursday or Friday, and the chamber's supposed to put out an email about it. And she's going to talk to this new bill that they're trying to pass, and I guess what has been passed, or when it passes, what it's going to entail and what that will look like.
Mhm.
So I think that will be a wealth of information, because me deciphering and trying to figure it out, I just couldn't make heads or tails of what they're talking about on there for the businesses. Now there are options, and something that we've kind of always had at the bank is like, if you've kind of found yourself in a hardship like something like this, and let's say you do currently have a loan with your bank, what I often find is people just kind of stick their head in the sand and just avoid them and think, well, I'll just pay it when I get around to it, but just ignore them for now. The best thing to do is to reach out to the bank and say, hey, this is what I'm finding. This whole coronavirus has gone crazy. I've had to send home my employees. Customers aren't coming into my restaurant, or, whatever your business is. And so when you reach out to the bank and talk to them, you'll find that there are provisions that can be made where maybe they can extend, let you skip a payment and tuck that onto the back of the loan, or make some type of arrangements like that with you. And so, like right now, where Carrie and Kim couldn't be here, they had several loans in process. And with this whole coronavirus outbreak, their clients are thinking like, oh goodness, what do I need to do now? Maybe I need to change up this loan in the way that we had it. Maybe we need, is there a way that we can do a 12 months interest-free period at the beginning of it? Because I know it's going to be slower getting this business going, or what have you. And so they had several things like that come up.
Yeah, with-
And so there's options for sure.
right. So you actually have options where there's 12-month no interest. That's pretty good.
Yeah, or like 12 months interest only payment instead of having to pay towards principals. There's different options out there. So it's always best. Yeah, it's always been funny over the 15 years that when somebody's account gets overdrawn or somebody's payment goes past due, you just never see them. And it may be somebody you've seen day in and day out for years, but they just disappear when money gets tight. But really, that's the time that you need to sit down and talk to your banker and tell them what's going on, because there may definitely be provisions that can be made or adjustments that can be made on that to help you. So,
Okay. All right, ladies, let's hear your questions. Do you guys have any questions? You can put it in the chat. No one has any questions?
oh wow.
We answered everybody's questions.
Well, and loans are one of those things that I don't think you ever answer any of the questions, but the key is just sitting down and talking. And I would always say, shop around with the banks and just see what's out there. See who you get a good feeling for. Let's see, how is Heritage Bank handling business currently? So I'm stuck at home. I am going by one client's office when I finish this call. I'm going rogue and picking up a deposit for her because she can't get to the bank. Anybody who has the capability of working from home, they have us working from home. Let's see. Okay. And then, but in the branches, they are cleaning the ATMs, or we have the ITMs that have Teller Live. They're cleaning those frequently. They're going through and they're cleaning the branches all throughout the day and wiping things down. Yeah, goodness gracious, it's just been a crazy overload with new stuff coming out. I wouldn't be surprised if they didn't end up closing the insides of the branches as this thing grows, and because I think it's going to get worse before it gets better. So I wouldn't be surprised if they didn't go like to a drive-through only an ITM, but they haven't gone there yet. So I've got to stop by the branch a little bit later today, so I'll be able to kind of get a feel of what it's like on the inside. But of course, traffic, just like anywhere else, is very slow in the branches. They're encouraging clients to utilize the drive-through and the ITMs, just so that they're not making that face-to-face contact. But yes, most definitely using the alcohol wipes and the Lysol and stuff everywhere within the branches. So
I assume
I mean,
all the bankers and you're using gloves as your.
I don't know. I haven't been in to see if they're wearing gloves or masks or anything like that at this point. I don't know. I haven't been in there. Thursday and Friday of last week, I was in a training class, and when I left our administration office, they had placed saran wrap over the buttons in the elevator. And I guess they were changing out that saran wrap every few minutes just to keep cooties off of it. So
Wow.
so I don't know. Like I said, I've been stuck at home, but they keep sending out updates and emails on the different things they're doing. So let's see. Does
Yeah,
Heritage have a secured credit card? Is that what?
for building.
So we do secured credit cards, and tax season is always a good time to do secured credit cards because you're oftentimes getting back those big tax refunds. And so for those that maybe don't know the difference between a secured credit card and an unsecured credit card, oftentimes we may find ourselves in some credit binds to where our credit score doesn't allow us to qualify for just a regular credit card. So with a secured credit card, that's a great vessel to use to build your credit back up, or if you have no credit, to build good credit. And so essentially what you would do is say take $1,000 that goes into a savings account, and that money sits there. You can't utilize it. You can't touch it. It does earn a small amount of interest. And then a credit card for $1,000 is opened up for the client. And of course, you use it just like a regular credit card. You charge it up, pay it down, charge it up, pay it down. And then if for some reason you default on a payment, then that money over in the savings account sits there to pay that debt. But it's a great product that you can use. We do offer it at Heritage Bank, and several other banks, of course, are going to offer a secured credit card. But it's a good way to reestablish yourself and your credit worthiness, or to start off and build credit up.
You
But I
know,
always recommend, like, if it's
for the business
go ahead.
or is it for personal?
You can really use it for either one. You've got that product for either one. For business accounts, I find oftentimes they're looking for that larger balance.
Absolutely.
And so most people don't necessarily, if you've got $10,000-$20,000 sitting around in cash, then you might not necessarily need that you can tie up in a savings account that you can't touch. Then it may not be the best. If you've got that money sitting there, then why do you want to tie it up for a credit card? But you definitely can do it for business or personal. But it's a great way on a personal side to reestablish your credit, or to establish credit if you have none.
Okay. Any other questions for Dodie? So Dodie, do you guys report to Duns and Bradstreet for your business credit, or is that something you guys don't really see on the back end?
I want to say no more, that we don't any longer, but now I'm not 100% positive, since I'm not on the lending side in the Heritage world. That's something I can find out and shoot you an email and let you know.
Okay.
It seems like there was a discussion, and I'm trying to remember either they were discussing that yes they do, or no they don't, that they used to and they don't anymore. So I'll have to double check and verify for you on that.
Okay.
Because I can't remember if they no longer do or if they do. That yeah.
Okay. I know one of the things you mentioned when we spoke briefly in regard to the whole SBA rollout was that basically if you do not have a secure asset, you're feeling as if those particular individuals may not qualify.
Well, on the SBA side, that really, and I'll give you a couple different scenarios on there. There's different directions you can go in with the SBA lending. And so that's where I say it's going to be best for you to sit down and talk to a lender when you get ready, or you're preparing to make that move to either grow your business or purchase a building, because there's some steps that if you take them in advance that they may not qualify as your percentage down. And so to me, if I invest money into a business and then I want to go out and qualify for SBA loan, then I want whatever money I've already invested in that business to count. And so sometimes I guess they look at it as you put the cart before the horse, and if you do this before this, then it may not count. And so that's where it's so important to go ahead and sit down with a lender and line everything up. Like the example that I gave you with the business where they have land that was donated, so that won't count in their 10% or their 15% down. So let's say I'm a business owner, let's say I'm a dental office, and I've been leasing a space, but the space I'm outgrowing it, so I want to either, there's a couple different directions that I can go in. And so I've been in business for several years. So I have my profit history, I have my personal financial statement, I have my tax returns to show that my business has been growing. And so with SBA and the lenders, they can go in and forecast what the expected business for the future is for you. So we're in good standings there. So now I have several options. Do I want to go in and just lease a larger space and just bring more equipment, new equipment in? So maybe I need just a smaller loan to purchase this additional equipment. Or do I want to go out and do I want to buy my own space? And then, of course, I'm going to have to purchase new equipment on top of that. Or do I want to go out and do I want to buy land and then build my own building and build it out exactly what I need? So there's several different options, but there's steps in each one. Of course, if I'm just purchasing equipment and leasing a new space, then when I go into that, then I may need some cash funds, essentially like a line of credit, until we get everything settled, as we're in that moving process to continue to pay my payroll. Or if I go out and I acquire land and then build a building, then of course that's going to take extra funding right there while I still have these expenses over here on the backside. So there's a lot of planning and a lot of different steps when you decide, well, which direction do I want to go into? And so that's where it's going to be so important to coordinate that with your lender, just to say, well, I want to make sure everything qualifies. So I don't want to go out and purchase the land over here maybe in my personal name as opposed to my business, or you just want to make sure you have everything lined up just so and find out the best direction. Okay. And so of course when you do that, your payments are going to vary depending on what you do. But you may find that if I'm just purchasing new equipment, it's only going to be financed, for a shorter term. Whereas if I go over here and I do the whole shebang, I can finance it for a longer term. And so my payments may not vary that much just because of the time difference. So it's important just to do that planning and sit down and figure out what's going to be best for you.
So just to kind of walk away with just some things they can walk away with. So if they're looking for any type of lending, your suggestion is they either have to have secure asset, and or if they're looking for anything regarding SBA, they absolutely have to have their business plan. Are you looking for a 3-year projection or 5-year projection? And I know you're not necessarily on the lending side, but typically what is the projection? 3 to 5 years, 3 years? What are you guys looking at?
And I can't answer that for you just, exact on there, but they do go in and they forecast based off of, we were joking on Monday in the office, I was there and we were talking about, gosh, are a lot of business owners going to come in and need loans with this whole coronavirus? And we said, well, but we're basing their forecast off of their past history that's been fantastic, and then now there's nothing going on. And so we were kind of laughing about, well, gosh, how is this going to affect the lending world? But they do go out and they project it based off of your past numbers, but now how far they'll forecast and all, I can't tell you how far in the future they look on that. So
okay.
The key is that there is a down payment. A lot of people think, well, gosh, I can get this SBA lending and it's not going to cost me anything up front. But typically you're looking at 10, oftentimes 15% down that you're going to have to put into a deal. So you've got to have some cash up front, but they can consider, if you've had invested other money into it, they will consider that as part of the down payment. So that's the biggest thing, is a lot of people just think, well, there's funding and I'm not going to have to come out of pocket, but unfortunately you do. On the business side of lending, it's very different than going out and obtaining a mortgage, because everything, of course, with like buying a new house is so regimented through the government that when you apply for a loan, the time frame that, disclosures have to be out to you within a certain period, and then you have to review and sign those disclosures within a certain period. And if you want to move forward, you have to sign within so long. Before you can close on the loan, you have to have your documents in front of you and time to review them sign within a certain period saying that you did review them. And then at the closing, you've got that 3-day rescission period in case you change your mind. So there's so many regulations on a consumer side for a mortgage, but when you get to a business side, it's free reign. Your banks, the lender, and everything are the ones that are, really controlling, so that you don't have as much regimen. It's a matter of sitting down face to face and saying, this is what I want to do, and the bank saying, well, this is what we're willing to do. And then you kind of go to the negotiating table and just say, well, wait a minute, is there any way we can, with the economy, look at what's going on. I don't know if I want to pay that high of an interest rate. Is there any negotiating on there? Or, wow, that's the closing cost. I only have this amount of money instead of that amount of money. Is there any negotiating room in there? So really with it, it's not regulated. And it's just a matter of going out and, really seeing what you can fit to meet your means and what, a bank is willing to do for you.
Okay. And so right now, you guys, what is your suggestion if someone needs to talk with you? Are you taking emails? I know you're going to a client today. Are you coming out to businesses? What are you doing?
So they really don't want me with businesses. It was so funny yesterday because I had someone whose scanner messed up in their office, and I walked them through over the phone how to connect it back up. They had moved it from one computer to another, so I got them, through the whole setup process, but the scanner was sticking, so everything wasn't going through all the way. And I said, oh, I'm just going to need to come out. Let me bring you a new scanner. And when I called about getting a new scanner, they just flipped out. And so one of the girls that helps me with installation, she said, I've got one at my house. My neighbor actually works in that office. I'm going to just drop it off on his porch. He'll get it off of his porch. He'll take it into the office, and I'll walk him through setup. And so, so they really don't want us in and out of offices any more than what we have to. So I would say if someone has a loan question, first off, just for your safety, calling us, because we can, most definitely get things going over the telephone. For example, we've got one client that's up, I think, in Austell right now that we're working with, and it's just in the new phases. And so we said, instead of us driving all the way to Austell, let's get your financials. Send us the things that you want so we can even take a look at it to see, can we do something with it first? Let us review financials. And then at that point, then we can schedule the next step on there. So yeah, just having those phone conversations, those email chats, that's going to give you a good idea. Emailing us and saying, hey, this is my business. This is what I'm looking to do. What would that look like? What are the next steps on there? And then we can get things going from there.
Okay. And are you opening up accounts online, or how are you doing it if you're not doing anything in person?
Well, I'll tell you, with the deposit side, my job is unique. And when I came home to the bank, they weren't necessarily doing deposit accounts the way that I do them now. We had a business banker, and it would be, if you reached out, you needed an account open, she'd get it open. And 9 times out of 10, she would just email you the documents. Hey, sign, print this off, sign it, scan it back to me, boom, we're done. To me, I love being out in the field. I love building those relationships and giving that personal touch. So just me being on the road and in and out of businesses is just something that I enjoy. So we most definitely, if you need an account open, call me. It may be that I have to go rogue and sneak out. If you want me at your office, I don't mind coming. But we most definitely can email those documents back and forth and get things going without you having to come in or without us having to come to your office. Especially if you've got that capability of printing and scanning. But if I had to sneak them in your mailbox and sneak back and pick them up, we can work something out.
Okay. All right, ladies, do you have any additional questions for Dodie? We're at about 9:06, so if there are any additional questions, and just FYI, we're trying to get additional clarifications on the SBA regs that are coming down from DC. So we have been in touch with SBA directly, and when they are in a position to have someone on a call, hopefully like this, then we'll definitely have that. But they are slammed, as you guys could probably imagine, and trying to really just kind of figure out what because they have to get through the legalese of what is being sent down from Congress and the White House. And my understanding, this is definitely the first time that they have recommended SBA do the lending themselves, which I find extremely interesting because that would mean a complete pivot when it comes to the banking industry, and I'm sure Dodie can attest to that part. But if there are no more questions for Dodie, Dodie, what is your, we can send, are you comfortable just giving out your email address, or how do you want to?
Yeah, no, that's fine. So it's Dodie, Dodie dot Cason, Cason, at heritagebank.com. So just my name, but with a period in the middle, Dodie.Cason at heritagebank.com. Or my cell phone number, I'm home, so I love to talk to anybody that wants to call, is 678 776-0336. Again, it's 678-776-0336. If you want to call and us have a chat, you're welcome to do that. And like I said, I won't necessarily have all the answers, but I can get answers for you. So
absolutely. And the banking application for business banks, do you want to send that out in an email, or is your preference to do what?
I can. Yeah,
Okay.
I can email out an application and a personal financial statement. And like I said, usually that's what it is really just completing that personal financial statement and tax returns, and you letting us know what you're needing to do. And then we have a program, we input it in, and it kind of gives us what we call the spreads that'll show, kind of your profits, your losses, and everything. It'll plug all that in there. Being, this far in the year, oftentimes we'll want like a P&L statement, a profit and loss statement, just to show where your standing is at for this year. So far. So yeah, I can email you, Ariel, a list of what we would need document-wise. You can forward that out to everybody, just so that they would know what that piece looks like.
And since you have come from multiple banks, what is the advantage of working with what I call a community bank, or even what you guys call yourselves a community bank?
So, relationships are so important to us, and really getting to know the client. And with that, all of our senior management, they're here in Henry County, Henry, Fayetteville, Clayton. And so we have boots on the grounds here in the community. So we know what's happening in the community. We know the businesses. We know the climate around here. And so because of that, it gives us more flexibility in our lending decisions. Whereas when you're with a bigger bank, and I can just certainly say with the growth that I saw from First State to Hamilton to Ameris, oftentimes they may have a broader range of products, but the larger you get, the more restrictions and regulations there are on that larger bank. And so you don't have as much flexibility. So you kind of have to fall right in that box. And so with like Heritage, maybe your credit doesn't fall right where we need it, but you have a lot of strength over here, so you're not falling in that box. But we can work outside of those lines. But with a bigger bank, because of the regulations, you've got to fall right in there, and sometimes that makes it harder for you to qualify. Sometimes it's easier with a bigger bank because they've got a bigger selection of products. But oftentimes, if things are a little squeaky here or squeaky there, then we can work around those things. So it's really for us all about, it's not about numbers. It's about, getting to know the client and working with them. So.
Awesome. All right, ladies, if there are no additional questions, we have recorded this particular session so that we can send it out. You can look at it again. You can hear it again. If there's any additional information that you want clarified, ask now, or send Dodie an email. All right. Well, I appreciate you, Dodie. I know we were trying to make sure we could get online. Things have worked out well. And Lisa said thank you. Yes, thank you.
Thank you.
And so, ladies, we appreciate you logging in and coming into the call. And we promise to do more of this, especially in light of COVID-19. This has definitely been an interesting experience. But one thing you learn in business is you have to learn how to pivot. and be flexible. And that's just what we have to do at this time. So anything else you want to leave with, Dodie, before we log
No, no, y'all call me. Call me, email, something.
Yeah,
And then let's all do lunch when this whole thing goes away and we can all go to lunch.
yeah, absolutely. All right, ladies. Well, you guys have a great morning, a great day. And if there's nothing else, again, we have everything recorded. I hope, Andrea, you were able to hear. If not, hopefully with the video that we'll send out, you'll be able to get the information that you needed. So thank you all, and you have a great day.
Thanks. Bye-bye.
All right, bye-bye.